The current state of Bitcoin, a landscape of growth and uncertainty. Bitcoin stands at a crossroads. Institutional investors and policymakers are now paying attention. Its decentralized nature and fixed supply fuel its rise, yet uncertainty remains. Regulatory frameworks are evolving. Volatility persists. The path forward is promising but challenging. Major corporations recognize its potential as a store of value. Sophisticated trading platforms and custody solutions are developing. Governments grapple with regulation. Some countries foster innovation, others remain cautious. The future hinges on navigating these factors. Success depends on wider adoption and trust. The journey ahead is one of immense potential and risks. Macroeconomic wins, navigating inflation, policy, and global sentiment. Bitcoin exists within a larger macroeconomic context, susceptible to the same forces that shape traditional markets. Inflation, monetary policy, and global investor sentiment all play a role in influencing its trajectory. Understanding these macroeconomic winds is crucial for anyone seeking to navigate the Bitcoin market. Inflation has emerged as a significant concern in recent years. Central banks have responded by injecting massive amounts of liquidity into the financial system. This has led some investors to seek alternative assets, like Bitcoin, as a hedge against inflation. Monetary policy decisions by central banks also have a ripple effect on the Bitcoin market. Interest rate hikes can make traditional assets like bonds more attractive, drawing capital away from Bitcoin. Conversely, loose monetary policy can fuel demand for alternative assets as investors seek higher returns. Global market sentiment, driven by geopolitical events and economic data, can also influence Bitcoin's price movements. Periods of uncertainty and risk aversion tend to favor safe haven assets like gold, while periods of economic growth and optimism can benefit risk assets like Bitcoin. Institutional embassies, building the infrastructure for mainstream adoption. The growing acceptance of Bitcoin by institutional investors is a testament to its maturing appeal. This institutional embrace is not merely about price speculation. It represents a fundamental shift in how traditional finance views digital assets. Key to this shift is the development of robust infrastructure that caters to the needs of institutional players. Custody solutions, a critical component of institutional participation, have seen significant advancements. Secure and regulated platforms are emerging to safeguard large Bitcoin holdings, addressing concerns about security and counterparty risk. This has been instrumental in attracting institutional investors who demand the same level of security and compliance found in traditional markets. Exchange-traded funds, or ETFs, focused on Bitcoin have gained traction, providing investors with a regulated and familiar way to gain exposure to the cryptocurrency market. ETFs offer several advantages, including ease of trading, diversification, and transparency, making them an attractive option for both retail and institutional investors. Risk management tools specifically designed for digital assets are also evolving rapidly. Sophisticated trading platforms now offer features like stop-loss orders, options contracts, and algorithmic trading strategies, allowing investors to manage their Bitcoin exposure more effectively. Section 4. Bitcoin 2025, Charting the Possible Paths Ahead. Predicting Bitcoin's future is speculative, but analyzing trends offers insights. Widespread adoption and institutional investment could drive prices higher. Bitcoin might integrate into traditional finance, gaining mainstream use. Regulatory clarity fosters a stable environment for growth. Volatility remains, but the overall trend is upward. Various scenarios could unfold, influenced by multiple factors. Section 5. Data-driven navigation, using the past to illuminate the future. While predicting the future with certainty is impossible, data-driven decision-making can help investors navigate the volatile world of Bitcoin. Historical price data, on-chain metrics, and asset correlations provide valuable insights that can inform investment strategies and manage risk. Analyzing historical volatility is crucial for understanding Bitcoin's price swings. By studying past market cycles, investors can gain a sense of the asset's potential upside and downside risks. This information can help them set realistic expectations and make more informed decisions during periods of extreme market movements. On-chain metrics derived from the Bitcoin blockchain itself offer a transparent and objective view of network activity. Metrics like transaction volume, active addresses, and hash rate can provide insights into user adoption, network security, and overall market sentiment. Understanding asset correlations is also vital for managing portfolio risk. Bitcoin has historically exhibited low correlation with traditional assets like stocks and bonds. This makes it a potential diversification tool, but it's important to note that correlations can change over time, especially during periods of market stress. Section 6. A balanced perspective, embracing potential while acknowledging risk. Bitcoin has emerged as a transformative technology with the potential to reshape the financial landscape. Its decentralized nature, scarcity, and global accessibility have captivated investors and entrepreneurs alike. However, it is crucial to approach Bitcoin with a balanced perspective, acknowledging both its potential rewards and inherent risks. The potential benefits of Bitcoin are numerous. Its decentralized nature offers resilience against censorship and government control. Its fixed supply provides a hedge against inflation, potentially safeguarding wealth over the long term. Its borderless nature facilitates faster and cheaper cross-border transactions, empowering individuals and businesses worldwide. However, Bitcoin is not without its risks. Its price volatility can be extreme, leading to significant gains and losses in short periods. Regulatory uncertainty persists, creating challenges for businesses operating in the Bitcoin ecosystem. The complexity of the technology can be a barrier to entry for some, requiring a certain level of technical understanding. Section 7. Seeking expert guidance. Charting your course in the world of Bitcoin. Navigating the world of Bitcoin requires careful consideration and a thorough understanding of the risks involved. Before making any investment decisions, it is crucial to seek guidance from qualified financial advisors who can provide personalized advice based on your individual circumstances. Financial advisors can help you assess your risk tolerance, determine if Bitcoin aligns with your investment goals, and guide you on the most appropriate ways to gain exposure to the asset class. They can also provide valuable insights into tax implications, estate planning, and other financial considerations related to Bitcoin investments. Remember that all investments carry inherent risks, and Bitcoin is no exception. It is essential to conduct thorough research, understand the technology, and invest only what you can afford to lose. By approaching Bitcoin with a cautious yet optimistic outlook and seeking expert guidance, you can navigate this evolving landscape and potentially benefit from the opportunities it presents.